Price action real traders. Today I'm going to show you how to identify engulfing zone in strong trend. This is part 9 on how to identify engulfing zone in strong trend. So let me try to take one live trade before we start. So here you can see we are in ranging mode. This is ranging market. So here we cannot trade based on strong trend, so we have to wait. To get good opportunity, let me check another pair. Here as well is ranging. Here as well. Okay, here you see, here is strong trend. So here is our zone. I will draw. We draw here and here. So this is our zone. If market come and touch this zone because of strong trend, I can take my trade here. So I will wait for market to come back to this zone. When I see rejection, market touch this zone with the rejection, then I will place my trade call option because of the alignment of the EMA. Here you see because here you see we have, here is our 200, here is 100, here is 50, here is 20, and this zone is above 20. So when market come and hit this zone, then I will place my trade. So that's why I put this alert. If market come back, I will know. So let me check another one. You see here is another strong trend here. This is strong trend. Why? Because of the alignment of the EMA. And here this is the zone. Now market is at the zone. So here is our zone. You see rejection here. Yes, I can see rejection. I will place call option here. I place my trade call option here because I know definitely this candle must be green because of the alignment of the EMA. You see we are in strong trend here. So here this is the zone here. This is our zone. See, here is our zone. The whole area here is our zone. So I know definitely this candle must be green. So that's why I place my trade call option at this zone. Market is doing some panic, but I know definitely it must close above my entry point. This candle must be green candle. We have 7 seconds. You see, this is green candle, so that's why I place my trade confidently. Why? Because you see 200, you see 100, you see 50, you see 20, and this zone here, you see market engulf here. You see here, this is the weak candle, and the market engulf this weak candle. Then if market come back to this zone, then you can place your trade. So that's why I immediately place my trade here with confidence, because I know definitely here market must go up. That's why I place my trade. So let me show you some. I took one live trade based on strong trend. You see the alignment, the EMA are very far away from each other, show that the trend is very strong. Now you see market is trying to touch my zone where I draw. So if market touches this zone, I see rejection, then I will place my trade call option, because this is the strong trend. You see market touch, you see rejection, you see rejection, see market is rejecting here. You see, you see gap down. So I told you, if you see gap down, don't place your trade. Market may reverse. You have 50-50 chance here because of this gap down. So as soon as you see gap down, avoid. Here market may reverse, market may still go down. So you have 50-50 chance. So any trade that you have 50-50 chance, don't take your trade. Just wait to get at least 80 to 90 chance, then you place your trade. You see here there is gap down here, and here is like spinning top. So if this candle there is no gap down on this candle, then I can place my trade. You see rejection, you see another gap up here, you see gap up here. So don't place your trade. You see here there is little bit gap up, still here you have 50-50 chance. So don't place your trade here. It's very dangerous to place your trade here. If you see gap down or gap up, market may still go down. I'm coming, let me pause. Okay, sorry, I'm back. Let's continue. Somebody has come. So you see my zone here. You see here, because of this gap, you see, but this one there's gap, still market reverse, but no problem. Anytime try to get at least 80 to 90 chance. Don't place your trade with gaps, because here you see gap, market go down, another gap, market go down. But here you see gap but market go up, then you can place trade here. As I have told you, in the zone, you see market is coming to the zone, then you see gap here, market go down, then you see another gap, market go down, When you see gap, then market go up, then the next candle will go up. So this is the logic. So anytime try to identify the gaps, don't place trade anyhow. So I was not here because I was, I would have taken this trade. So let me show you more. You see here, this is strong uptrend here. You see, strong uptrend. But here is the zone here. You see here, all area here, the zone. You see here, this is the zone. As I have told you, you see here we are in uptrend. Markets creating higher high and higher low, show that we are in uptrend. And the alignment of the EMA, you see the 200 is down, you see 100, you see 50, you see 20, and this zone is above. So when market comes back to this zone, here is the zone. Let me pause because of the network. So let's continue. So as I was telling you here, you see this is the pattern. You see here, market is creating higher high, higher low, show that market is in strong trend. And you see here, then you see engulfing. This 1 2 3 4 candles engulf this red candle here. So this is the zone here, and the whole area here is the zone. So what you will observe here, you see market is trying to come back to the zone here, but you see here gap. I told you, if you see gap, don't place your trade. You see hammer, if you see hammer, don't place your trade. You see after this hammer, you see another gap, then don't place your trade. And here you see gap here, gap down, don't place your trade. And here you see another gap up, so don't place your trade. As soon as you see gap up here, you can place your trade on the next candle. You can place after breakout, you can place your trade on the next candle. You see after this gap, and you see market is going up. So this is the way you will take your trade easily in strong trend, because of the alignment of the EMA. You see 200, you see 100, you see 50, you see 20. So even though this market is very bad, and you can still manage to take your trade easily if you can be able to identify the zone. Here is ranging. We will come to ranging when I finish this strong trend. I will come back to how to trade in ranging mode. Here is the ranging. So let me check another one for you. But here you see, here is strong uptrend here. You see here is the zone, but you see little bit gap here. You see little bit gap here, but here with marginal of safety, you can take your trade here. If you can take marginal of safety here, you can wait for market to come down here, then you can place your trade on this candle. Because of the breakout of the zone here, here is the zone, market close at the zone, sorry, here. So because market closes, then even though there is no rejection, as I've told you, if you didn't see rejection, don't take your trade. But if you know running candle, you can still take your trade on this one. So let's check. So you see here is strong downtrend. Here is strong downtrend. So here, anywhere you see engulfing, you can take your trade here easily. You see, this is the engulfing. Here is engulfing. Here is another engulfing. This is another engulfing zone. Here and here. Because this doji, you see this 3 candle engulf, this green candle and this doji. Because this doji, you will not count it. So here you see this is the engulfing zone. You see market close at the zone. You see here reverse. You see another here, market close again, market reverse because of the strong downtrend here. You see here, this is the way that you draw below this doji, because this doji and this green candle are the same candles. So you draw below this doji, and you see market touch, reject, you see reverse, market close inside, you see reverse here. You see market close again, market reverse, you see here, market reverse again, breakout, then market reverse again. Why? Because of strong downtrend. You see here, you see 200, you see 100, you see 50, you see 20. Then here is your zone. Even though this market is not nice, sometimes you cannot get nice market, so try to avoid bad markets. But if you know the market very well, you can still take your trade. If you see long weeks and too much dojis in one place, so don't take your trade there. You see we have almost 3 dojis, 1 2 3 dojis here. So it's very risky to take your trade. Sometimes if you place your trade, it can take you to bad entry point and it can create doji. Anywhere you see too many dojis, so don't take your trade there. Try to avoid where you see too long wicks and too much dojis. Many dojis are dangerous. So you see here another zone here. Why? Because you see 200, you see 100, you see 50, you see 20, and the zone is below. Then you draw like this. You draw like this here. Then you draw like this here. So you see here, you see market didn't touch here. So this one you should not place your trade here. But here you see gap. I told you if you see gap, don't place your trade. You see marbuzo, don't place your trade. You see here is hammer, don't place your trade. You see, after this hammer, then you can decide to place your trade here because of this momentum. As soon as you see gap, you see hammer, you see dragonfly doji, you see spinning top, means the trend will be strong. It will break any level. Don't take your trade. As soon as you see this type of candles, try to avoid, because most of the time if you see market coming with gaps, this what do you call it, marbuzo, hammer, so the trend will be strong. So don't place your trade there. Try to avoid. So like here you see, here you are in strong downtrend because of the alignment of the EMA, and you have many levels here, many zones here. You see here, this is the zone. So here is your zone. Here, this is your engulfing zone, but don't place your trade here. You see here, you see gap, you see gap. So it's dangerous. It may work, it may not work. This type of zone, it may reverse, it may not reverse. So don't take your trade here. Try to avoid this type of zone. You see, because market is not nice. See, let us look for good market. All here bad. But you see here, this is your zone. You draw here, and you draw here, but the trend is little bit not very strong. But here you see, this is the alignment 200, 100, 50, 20, and this zone is above 20, as you can see here. You see market little bit rejection, you see market reverse, and here you see market touch again, a reverse, you see market break, you see reverse. You see, so it's very simple. It's very easy to take trade on this type of strategy. This strategy work almost 80 to 90%, and this strategy is the one that I'm using all the time to trade. You see here, strong downtrend here. You see market come back, retracement, engulfing, retracement, engulfing, retracement, engulfing. So anyone this type of will work. Here you have many zones, as many as possible. You see here, you see market touch here, rejects, you see put option, but here you see you have gap. I told you if you have gap, don't place. You see spinning top and gap, but after breakout you see market reverse, and here you see this one touch, reject, reverse. You see, because of strong downtrend, you see here reject here, reverse, but here is zone. Sorry, this is the zone here, and here is the zone. You see market go up, gap, market go up, spinning top, wait. After this, then you see market reverse. You see, but here you see here gap, don't place your trade, but here no gap, you can place your trade. So it's very simple. So this is the end of this video. I took only one live trade based on this strategy, because this strategy is very nice. So this is the end, and you see the market is very choppy. It's not nice now. So in this type of market, don't try to trade, because most of the time you will get late entry, you get bad entry. Market may create doji, may create long wick. All this will happen in this type of market. So don't take your trade if you have this type of market. So if you like my video, please like it, share, comment. I will say thank you. Bye bye.